Okay, so with that as an introduction, let me just tell you what I think are the 4 reasons why cryptocurrencies really represent a true improvement of actually the current state of transmitting digital currencies. The first is, I think there is a real rethinking of trust and institutions of trust today. We've seen it both in terms of technology, right? There's been huge concentration of technology. Fortunately, it's mostly American-developed technology. But with the high-profile hacks of Facebook and the data breaches, I think institutions have done a very poor job of maintaining people's privacy. But there's a problem with trust in governments as well. The second is that millennials are a massive jump in the size of a generation. How many folks here were born after 1981? Can I just see a show of hands? Okay. So it's about a quarter of this room. So that means 3/4 of the people in this room are teenagers. Just kidding. 3/4 of the people in this room are Gen X or boomers, or silent generation. Millennials globally represent close to 30% of adults today. Okay? That is 2.2 billion millennials compared to something like 1.6 billion Gen X. So this current generation is so big globally that you have to go back 50 years to understand the impact millennials will have on consumption, purchases of financial products. And so we have to think what it was like, really almost going back to what the boomers, how the boomers transformed the economy. The third thing I'm going to cover is where I see some real potential for disruption, and I have some numbers to back it, why blockchain and cryptocurrencies could create huge amounts of financial disruption to the banking industry, but also to reputation systems and corporate America. And then finally, I want to cover why I think Wall Street is going to care about this as an asset class. Okay, so just a brief chart of where we think we are. And I think it's best to start with Bitcoin because, as you know, when you hear people talk about cryptocurrencies, a lot of the skeptics will say something like, I believe in blockchain, but not Bitcoin. And hopefully by the end of this conversation, what you'll have an appreciation for is that that is a statement you can't make, that Bitcoin is really the blockchain, or that blockchains that people envision within corporates can't really be run without a robust cryptocurrency. So I think tokens are sort of critical to a lot of the blockchain architectures, and the most important of these is actually Bitcoin. So Bitcoin's been trading since 2010. Since 2009, and we've marked it with just some shading here that there's been 3 bull markets and 2 bear markets, and Bitcoin could be in a bear market now. You know, we still think it's in a bull market, but what's interesting is probably the most horrific bear market for Bitcoin is this period from 2014 to early 2015. So it was a 406-day bear market, almost a 90% decline, peak to trough, from December 2013 to January 2015. I think what's quite interesting is that by January 2015, at the end of that bear market, Bitcoin was back to where it was in October 2013. So it took 400 days to rewind 2 months of price gains. So when you think about Bitcoin, what it was, you know, these bear markets are retracements and recalibrations to fundamentals. But interestingly, in January 2015, when Bitcoin had bottomed, it was trading at 1 times mining cost. So price to book was 1 times. And its premium to our Metcalfe model was roughly a 50% discount. As of last week, Bitcoin had retraced all of its, by the end of last week, Bitcoin was back to where it was 2 months before the peak in January. So in other words, Bitcoin had gone back to where it was in November and was trading at 1 times price to book on a mining cost, and then it was trading at a 50% discount to our implied value using Metcalfe's law. So in some ways, I think Bitcoin is poised to rise from here, but let me walk you through the fundamental reasons why we should be up bullish.